Yeah, you see, that's 60-50. That's what that is. Hello, everybody. My name is Jason. Welcome to Market Moves. I'm the wizard. Hello, everybody. Hey, Jay, how you doing? You're on mute, Jay. You're definitely on mute.
It'd help if I unmuted myself. I apologize. Just kind of rattling off there. One of those mornings. I'm doing great. How's your weekend?
Yeah, well, other than you got to wake up. I mean, it's been good. I mean, I will comment on Juan Soto joining the Mets. I mean, when I was a kid, the Mets won the World Series, and my dad was a Met fan, so I kind of became a Met fan living in Jersey. But I don't know, man. The Mets became everything I hated about the Yankees growing up. So I think I'm now firmly in the Nats camp with a soft spot for the Mets as opposed to the other way around. I feel like but I also feel bad for Juan Soto. I mean, he made a lot of money, but now that he signed with the Mets, that means that's 15 years of injuries, underperformance, concussions, domestic violence, or whatever. You know, that's kind of stuff that happens with Mets.
Yeah, I mean that's kind of like being on the cover of the EA Madden sports game every year, right? Like, oh no, don't put me on there. My career might just come to an end, right? Because of an injury or whatever. So, hey, good for Soto, right? Like, but holy cow, almost $1 billion deal. Like, when I saw that headline, I'm like, oh, is that like an AI fake generated, like, the Onion post or something? And nope, it's
kind of
real.
quick back of the napkin math is, that's 51 million a year. There's 162 games a year. So that means that's what, $300,000 a game. So like 4 at bats. If he has 4 plate appearances, that's $80,000 per plate appearance. I mean, I'm like,
Hey, man,
that's assuming he doesn't get injured or suspended or whatever.
Can I get one of those for showing up on a trade with my daily trade plans? That's a great ROI. Let's jump in. That was fun. Good old Soto. All right. Okay, let's get into this week here. I mean, first and foremost, let's kind of just look back at last week. I think another great week here in Volland for all of us. We kind of nailed the bottom. 60-25 actually came in overnight on Sunday to Monday. We hit that level and we never looked back from there, Wiz, right? That level held in futures action overnight. And from there, the trade plan was pretty simple. We hold that 60-25 level. We're basically going to go to 6,100. So we called out a couple of, major levels here, the 60-25 being one, but resistance, if you remember, 45 to 55 last week, kept hitting that. Took us a little bit, to get past that. But once we hit there, it was pure liquid gold up until about 6,100. But Friday, so Thursday and Friday, I'll say, we got to 60-94-ish. I think on Thursday, we actually hit, essentially 6,100 on Friday. There was that massive wall, right? And it hit that wall, and we sold off Friday about 20-ish points. And overnight we actually sold a little bit more, but found our footing. So all in all, Wiz, we had a pretty good week again. Can't hit these types of analysis without the good data that we have. So anything you want to chime in from last week at all?
Yeah, no, I mean, I know that I make a big deal on Twitter about kind of like my bearish expectation, but it'd be stupid to sell calls into this or not hedge even to the upside or anything like that. Out of the money butterflies, I rolled it a couple times up and, just you collect profits where you can. But personally, the way I trade, and, I know you trade with ES, right? You just trade kind of futures. It's simple. It's good. It's effective. For me, I have a thesis, and then I have like a second kind of secondary, what's the second most likely thing to happen, and what are the risks I'm willing to assume. At this point in time, the risk I'm willing to assume is like a plus 100 day, like a massive move up to like past 6,100 to 6,200, that kind of area. That I'm not expecting at all. But my most likely is a gradual, very slow, even with the good NFP report last, what was it, Friday?
Yeah.
That went up, what, 20 points? Like that was as good of an NFP report as you can get. And that's because we're hitting Vanna resistance going up very slightly. But it is also the most likely because we were at Vanna positive. But there is always, we'll talk about it later, but there's always that threat now of kind of a spike to the downside. So those are the two trades that I try to get and make sure that if one of them realizes, it pays for the other one, right?
Yeah, agreed.
I mean, that's kind of my trade plan, and I use options, so I kind of use them as a Swiss Army knife a little bit, and it works for me. But ES is quick, it's simple. I like the Swiss Army knife. You like a hammer, so.
I'm like Hulk, right? I like to make some damage.
Yeah, Hulk smash. That's his weapon.
Hulk smash, dark matter smash. There we go. All right. Well, you're on the show with us jokers, so you found your way. I can skip that fun. Let's talk a little bit about catalyst this week. I mean, so China overnight had their CPI and PPI. I mean, I don't even want to get into that. Just China is like a wreck right now. OPEC has meetings tomorrow. That's going to be an important one to keep an eye on. They cut some oil, and then people were freaking out. Is it a demand thing? Is it a economy thing, or why are they cutting? So I'll be curious to see what comes out of OPEC this week, especially when it comes to energy.
I think with Trump as president and his whole big, drill baby drill kind of thing, those OPEC become so much less, so much less significant to me.
Agreed. Good call.
Yeah, but that's just me. It definitely affects the oil prices, but half of OPEC now is in a war.
That's so true. All right. Wars. I don't even want to get there. It's a Monday. All right. So Wednesday, Thursday, those are our big catalysts for the week, Wiz. So I kind of just, I'm going to call it out for the folks here, like especially who are trading intraday, dailies, hero DTs, whatever you want to call it. It's going to be slow, right? You don't have any catalysts as you just kind of saw there. So Wednesday is the first day you see a major catalyst. Maybe they front run it, maybe they don't, but look at volume. If volume is low, you'll know why. It's either they're already in positions or they're waiting for Wednesday's reaction. So Wednesday, Thursday, CPI, PPI, and then the UK's GDP also reports overnight on Friday. So those are your major catalysts, not a lot of them. Shockingly, earnings are still going on. A couple of call outs I'll just put out there. Macy's, Adobe, Broadcom report, Oracle as well. If you're into the AI game, the AI ticker is actually reporting as well. So if you're curious, I want to see what Toll Brothers, what they're going to report on. I'm kind of curious how, from a housing market, how they're doing. So this one I'll just pay attention to. But anything you want to chime in here, Wiz?
I mean, I'm sorry, I can't stop staring at Lovesac, but so and also health equity.
That's right.
People health Okay. Anyway, they have frustrated me a lot over the years. So but Broadcom,
I won't even ask.
I mean, it's a conversation for a different day, but Broadcom seems like an interesting earnings play. AVGO, right? They usually have some decent option traffic. And Adobe tends to have some decent option traffic. Macy's ought to be interesting. But yeah, I think Oracle too ought to be interesting. So I think there's a lot here that I mean, Broadcom is like and Costco too. It's a clear you can play that using Volland earnings, and the rest of them are mostly just kind of interesting, like just kind of seeing how the economy is treating these people.
Yeah, exactly. Yeah, I think the other one, RH, that's be curious how that one does from a luxury and higher end furniture standpoint. So
Yeah.
keep an eye on that. All right, let's jump into just one quick interesting fact. As I was doing my charting and kind of laying everything out during this rally we've had in November, right? What's been interesting is just market breadth has been horrendous, right?
Mhm.
Is if you kind of look at like a couple of the key sectors, like these sectors here all fell between 2 and 7% in the month of November. So besides lower volumes and kind of that slow grind up, I mean, this is the reason why only tech, consumer discretionary, comm services, and then consumer staples. The only sectors that showed gains over the past few weeks. Is that not
Yeah.
wild?
It's wild, but it also kind of says, and if you also look at like the S&P mid cap, S&P mid cap has not even gotten, yeah, I mean, it's declined since late November. So I think that, yes, breadth has been terrible. There's also, it seems like it's alternating between the Russell being very green and then the Russell's red and NASDAQ is very green. I mean, there's a lot of, what's the word? Not dispersion. What's the word I'm looking for?
Not.
Yeah, when I guess
I'm
dispersion is
having the
fine.
same problem.
Yeah,
Yes.
but yeah,
It's a Monday.
it's very interesting. Like kind of all the sectors are not going in concert. It's not usually a sign of a healthy market, but
No, I mean, and I think that just goes to show, like, you start seeing tech, sell off a little bit. Like, look out, folks. Like, that's the XLK, QQQ, NQ, whatever your flavor of tracking the tech sectors. Definitely look at those, keep an eye on them, because the minute that those go, I mean, you've already had some nice, haircuts here going on, especially with energy, right? It doesn't mean that tech is going to avoid that same fate if it's a more market economy kind of concern. So
yeah,
keep an eye
and
on QQQ. Even if you're not trading it, it should always be on your radar just to see how the tech sector is doing.
yeah. Well, Nvidia since their earnings still hasn't recovered. They've
No?
gone down past 140. I think last week it popped up a little bit, but I don't even think it's above 140 again. I think it's down again. But if it
Yeah,
is,
pre-market. Yeah,
yeah,
pre-market, we're sitting at about 139.56 and change. Yeah,
yeah, and
139.56.
that's pretty. For the largest cap in the S&P to be down from 150 down to 140 is not. That's significant. That's something to from earnings. That's something to pay attention to. So there is like a lot of struggling under the shuffling the chairs underneath the hood that we have to pay attention to.
Agreed. Agreed. All right, let's get into the gist of this week. So, makers are expecting about a 62-point move this week. So that puts us about 61.51 to the upside, 60.28 on the downside. So it makes sense to me. I'm actually surprised it's that large, just based on the one or two catalysts we have this week. But that's your range. Let's kind of get into it. I'm actually going to go live into Volland here. You can read through the trade plan for those, in the Discord. But what I want to get to, we did have a shift in the data here. So like what I would show you is just not very representative of what's live in Volland right now. So let me hop over here, Wiz. And then, so do you want to just quickly talk about, this was a hot topic, not a hot topic, but a topic in the Discord. And I mean, I felt amazing trying to get my trade plan early, and then I kind of forgot about the whole VIXing over the weekend. So, do you want to talk to us about how the van had started to change over
Yeah, so I
the
mean,
weekend here?
especially when there's a lot of traffic or something that's near the current date. Weekends we don't adjust our volatility yet anyway, like the VIX does. That Monday effect where VIX goes down more than it should. It under VIXes on Friday, but over VIXes on Monday, to account for the weekend that doesn't have any volatility. The way we are measuring volatility on Vanna mostly is kind of realized. And now that weekend has passed, we tend to, you'll see, I mean, the curve itself shouldn't change very much, but you'll see a shift, and, it might shift down or up. 60/50 is deep, that's in the money now, and that's still sold calls. So that's that's now negative Vanna and, and positive gamma. I mean, if you look at the gamma, you're going to see everything all green there.
Me too, actually. Let me go to it. There's even more fun. Here we go.
Yeah. See, so, and by the way, positive gamma is not what suppresses volatility. It's Vanna that suppresses volatility. I would say that again. Gamma does not suppress volatility. The very definition of gamma is an accelerant to delta. So how is it that higher gamma, more accelerant, can be a suppressant? It's volatility. It's Vanna that suppresses a lot of gamma, something that will move delta quite a bit, right?
Yeah.
And you see those two big spikes there that are now, a little bit down. Yeah, that are now in the money. Those are in the money calls, right? So
Yep.
long calls for dealers. So, if the market decides to take a turn, those are going to fall quick. And, with Vanna now, now they are negative Vanna and positive gamma. So if, these are the kind of signs that we see when the market makes a turn. And I think is that this year, or is that all expirations?
Yeah, this is all expirations.
All expirations. Yep. But I mean, still the near term is accounting for more than the far term in gamma.
Yeah. So, I mean, if we look at just until the end of this year, here we go.
Yeah, it's basically the same.
Same story.
Yeah, but that's because of all the December. That's all the December calls. But now, so that's why you probably have seen a shift in Vanna a little bit down. So
that makes sense. Thank you for that. I think I always forget why it makes that shift, and I'm like, oh yeah, idiot. It's how they calculate the VIX. But yes, thank you.
Yeah.
All right. So let's kind of look at the Vannas. Then I know you and I wanted to look at the deltas here as well, right? So
yeah, I'll talk about that too later. But
all right,
go through your plan.
Yeah, so if we quickly look at this, I mean, 6085 here. I was going to say 5985. Oh, my God, we're in the 6,000s now, right? So 60, 85, 80. Like, I mean, unless you see volatility increase right now, like Wiz, I'm personally myself, I don't favor shorts or a bearish kind of like pure bias, right? Like, I mean, look at it. Yes, there was a 10, 15 point move you can capture here. But if you looked at like the overnight action at all, right? If I go to my charts here, just to go to a 30-minute chart, like this is 85 right here from an SPX standpoint. When you look at it, every time price overnight came into it, find some buyers, pushed it up. Finally, it found some sellers, and again pushed it up, right? So between this 85 to 75, even the 55, those giant gamma towers that you saw there's just a lot of noise, right? So I personally myself, I would not be like shorting into any of those levels because I don't know what the reaction out of them is, right? Is 85 going to hold? Is 80 going to hold? All I know is there's a lot of interest in this area. I'm a tiny fish. I don't want to be swimming with the big whales here, Wiz, right? So that's how like my viewpoint of the world is. And I think the Vanna here clearly shows that is like there's two things I'm going to do this week essentially to make it simple. Unless this big pillar breaks here to then take us towards those two gamma pillars you saw, the 60 55, right? That's then maybe the short, right? Otherwise, I wait to see what 6100 does. Do we finally break it? Does something change? Does CPI do it for us? But otherwise, like I think it's still a buy the dip scenario here. Get
I
over
mean,
to.
6,100 is a brick wall, and we're only at 1690 right now. So, um, you're right. It is going to be kind of condensed. The positioning I would reiterate is, you know, probably the most likely move is the slow grind up, but then protect yourself on the downside. Make sure you're protected. So that's
Agreed. Yeah. I think also, if we take a look at the Vanna exposure here on the weekly, I mean, you kind of have a similar story. I mean, to
mhm.
get 60, 80, 70, I mean, this is a huge cliff where you'd have to like jump off, and some volatility, some catalyst like would have to cause this spike to occur. Now, obviously, this can occur with a decrease of volatility, right? Still, so the way I'm kind of looking at that is, again, I want to see how 61. If we get above 6100, great. I'll chase that at that point. But between 6100 and 6075, like I'm an observer. Unless like I can find an entry for a few points to like scalp there, I would rather just watch, let the people with larger portfolios deal with whatever they're going to do intraday. But
Yeah.
that's the
Yeah.
plan. I think keep
I
it
would give it a
simple.
little bit of room above 6,100, maybe like 6,115 or something like that, just in case there's a spike, because usually those spikes will be you know will come down pretty quickly. But if as we've observed over the past couple of weeks, pretty much ever since Trump was elected, we have seen strong undervixing in order to get like vol crunches have been excessive in order to get the points that we're getting, and that's kind of how things work in a low Vanna or negative low to negative Vanna environment. Like in order to get those levels, in order to overcome these 6,100 types, you need to see a major vol crunch. And I don't know, what are we at? Like 13 now, 13 and a quarter, whatever
Yep.
Monday over VIXing we had. I don't know how much room we have to the downside anymore in VIX and implied volatility. I mean, maybe CPI can do it. And that's probably, before CPI, I don't know if we can get over 6,100. But only, unless that catalyst sees, significant downside, I don't know if we can pass that level.
Yeah, I mean, it's definitely going to be tough. I mean,
Mhm.
sure, can we? I mean, I was looking at the summer, right? We traded in kind of like that 11 to 12 range on the fixed, right? But can we see that? Sure, we can. And if we see that, like, yeah, that you start ripping through 6,100, you're going to 6,200, like,
Mhm.
like you're going to see those types of moves. So definitely keep an eye on the VIX there. I mean, I think that's been our kind of between the volatility, suppressing since the election, as you called out, right? Like that's been my mindset is, do I keep seeing it decrease? And that's simple. Then we're in a very, VIX goes up, spot's going to come down. We're in that kind of correlation. So until that
Mhm.
changes, like that's your formula for now.
Yeah, yeah. I mean, honestly, we may see some over VIXing today and tomorrow going into CPI. We did that. We did see that in NFP. Wednesday and Thursday, we saw a little bit of increase in implied volatility across the curve, and then on Friday, it tanked. It went, it was all erased and some. So, in order just to get to 6090, by the way, in order to get just these 10 points or whatever from 6080 to 6090. Was the fact that it was a Friday, but that's not insignificant. So
No, it's not. Well, let's hop into Delta here. Let me pull up Delta for
mhm.
you. You wanted to take a look at both calls, inputs, and what through the
Well,
rest of
and
this
all
year you wanted.
expiration.
Okay. Yep.
But even till the end of I mean, weekly is a little bit too much because we got to get the December OPEX. So make sure you get December option
I'm
expiration.
gonna. So I got the next 30 days. How does that
Okay,
sound?
that's fine. That works.
All
Then you're
right.
not going to see the JPM 6055, but that's all right.
Here we go. Here we go. Now, well, now we have to do that for the viewers, right? So give me a second. I'll get it updated here. It's not that hard. 1 minute. All right. All right. Let me zoom, and
Yeah,
I can zoom just to.
you don't need to zoom in that much. I wanted you to zoom out, actually.
Okay, there we
Yeah.
go.
So I mean, just to give kind of like a really quick overview of the thesis is that, typically every single year, we get the Santa rally, right? Where, pension funds and insurance funds and uh, annuities and, they all they all hedge their portfolio with collars and sometimes even synthetic shorts, which is a long put and short call at the same strike. And underneath that, they don't have ES. They have, a diverse portfolio, tech, all across S&P, probably with a little bit of dispersion. So, I favor tech or I favor, consumer discretionary or what have you. So that's what they have underneath. Those are the customers. Dealers obviously would have a synthetic long or, an opposite side collar, bearish collar, in which they are, a bullish collar, in which they are hedging. They're already short. And as time goes on, they would be releasing those hedges, right? And usually when, these annual rolls are done from December OPEX to December OPEX, the calls are, if they're in the money, they're a little bit in the money. The puts are usually out of the money. And that roll results in premium gain or even just slightly premium loss, like nothing, no big deal, right? But this year, now, if you want to, this year all expiration delta, I guess all expiration is fine for now. You could just like expand it. You could just go to calls. It's okay. The puts are barely anything nowadays. People are selling puts. So you could see how many spikes are here, right? Most of this is in the December OPEX, right? That 4,000, all but like, 20, 30 billion of that is in the December OPEX. 5,000 is very, very strong. 5,500 was strong last week, and now they've been pairing it off. So that's kind of a, slight concern there. These insurance companies now, you can't get away from it. You're going to have to pay, right? Before December OPEX. You can't get away from it. You're going to get exercised, even if you're holding it until expiration. When you hold it till expiration, you lose all that cash, right? That, let's say 5,000, for instance. I think there's 200 and almost 300,000 5,000 strike calls, in the money calls right now. And not all of them are short, but a lot of them are. You could see that secondary spike right there. That's a synthetic short. The puts will expire worthless. From a dealer standpoint, they're long those calls, but they have their short ES. They both expire cash, so they're just going to be a wash. What's left is the pension funds, right? They need to pay that money. 5,000. Right now we're at 6,100, almost 6,100. So that's $110,000 they have to pay per option. And there's 300,000 options. So almost 300,000. And again, I would estimate, about 240, 250,000 options probably have to get paid for by somebody, some family office, some hedge fund, whatever. In the aggregate, that has to get paid for. And in order to do that, they have to sell their underlying. A lot of them have bills, T-bills, and some of those have been selling off, like bonds, bills, U.S. treasuries. But a lot of it is dispersed equities. And this is hedging dispersed equities. It's not hedging anything else. It's not hedging, their treasury position or anything like that. So they're going to have to sell some of that. And that's what I can kind of see as I don't want to say a catalyst, because it's not really like a downside in the next 2 weeks. I don't think it would be sustained downside. I mean, it's not something that's destroying the economy. It would be dips to buy, at least over like the next month or two. But when you see above the market, you see right now they're just like little green tabs. you're going to need to see that start to go up, and you can really look at the December of next year option expiration to see when these rolls are actually occurring. So that's why I think it's more like it's going to be a spike down. It'll be over VIXed because there are so many sold calls right now. There's a lot of put selling, and there's not a lot of protection to the downside, and people are going to need to protect themselves because it'll be swift. It's probably, from Volland calculations, if you use the cumulative delta, it's like just going into the next year that has to be paid in notional. That doesn't mean that all of it, that doesn't mean I think that they're going to sell 160 billion. Some of it will be offset by the collar that they put on. Some of it will be offset by cash that they have on hand, or even selling T-bills. They're going to have to raise that money somewhere. So that's kind of where, but even if it's, half, 80, 100 billion, we kind of have a rule of thumb that 25 billion can get you 1% in SPX. That's like a little bit of a kind of a side study we have. So that's 4%. That's, that's not insignificant. So I that's kind of the thesis that we have. And then, 4% down, usually you get some momentum, put buying, and once you get above that 4%, then I'm going to start looking to buy that dip. You'll probably also get an over VIXing signal. So VIX will go up, 2 points more than than it should based on the drop. And, so, you'll get enough signals to know when the bottom is in. And then when you see that, then, you'll start you'll get a sharp move up. Trump will take over, and then we'll see what the economy does then. Cause it's, there's a lot of uncertainty around that still, even though it seems like there's certainty in some things, but, honestly, a lot of Trump's economic policies to me are contractionary. I know the first Trump term, it wasn't so, but to me, it's when you're reducing your country's population and trying to reduce costs, those are contractionary things. So I don't know what do you have any comments or questions, Jay, or anything like that?
No, I mean, to your last part, like, yeah, I mean, you increase tariffs, that's naturally inflationary, right? And then, you're trying to fight inflation at the same time right now. So that, like,
Right.
that's a storyline for next year. No, but otherwise, like, I think all of this makes sense. Excuse me. Got this wicked cough this week, so I didn't want to cough for all of our viewers there. But no, I mean, I think, as you notice here, guys, delta is very important. I keep track of it, right? I want to see that adjustment, see where where positions are coming in, where do I have support, resistance, kind of, the unwinding, I'll call it, is how I look at it in my head. Just it makes sense that way. But you kind of look at it like 6100 here as the prime example here on the call side, like pure wall, right? Until this changes, you're gonna see that, at least in a shorter term. But
Yeah.
to Wiz's point, like, you got to see above spot here. This is not how we looked last week. Go ahead, like, go backwards in time. Look at this data historically. The deltas are quite important, right? Especially when you hit one of these key levels, there's always an instant reaction at one of them. So keep an eye out on it. Couple this with your Vanna outlook if you do gamma as well. But the combination of these Greeks, it's not easy, but we're here. That's what we're here for, to provide the trade plans to kind of 1+1 kind of scenario, build out an equation for you. But
Yeah.
I
A lot of times you don't see this in Vanna because Vanna is very volatility and premium based. So if there's no premium, like right now in 5,000, they'll give you, very cheap 5,000 puts, right? There's no premium there. So you're not going to see that in Vanna. That's, so you kind of have to see that in Delta. And that's if you're going to do that, then you're going to see how customers have to react too. That's the other thing about Delta is you're seeing the actual positioning. You're seeing what people are paying and what where customers really are positioned. And, you don't want to discount is customers are not retail. I mean, yes, there's retail customers out there, but most of these like kind of singular focused big, spikes and stuff are not retail, and they're not trading like you or I. They're trading, on a mandate, very strict, specific mandate, telling them exactly what to do, when to do it, so that whoever is investing, whoever's giving those people AUM is not shocked, or they're not going to sue them, right?
Agreed.
So, and they're not very discretionary. The fund managers do not have a lot of discretion. So that's kind of, and so because of that, though, on the plus side, it's very predictable. You can see, you see where they are. You could check their, SEC filings. You could check, you see kind of at least sort of where they are located. With Volland, you could see exactly where they're located, right? And that's the whole purpose of this platform. And so now that we see what they have to do going into the end of December, I do think we will pull back at some point. I think they'll, it may be an over VIX pullback, and we may start advancing again later on. But that's the
I think even I was gonna say there was a better analogy in my head, but then I lost track of it. So I'll just let it be. You nailed at the end there. Let's jump into some questions, Wiz. Think we're ready for that?
Sure. Since you mentioned poor breadth overall, how are small caps looking? So yeah, I mean, small caps. First of all, the Russell. Yeah. I mean, small caps are doing well. I think that they're kind of encouraged, I guess, by the lower interest rate environment. But I mean, I haven't been looking at it a ton, so I guess you got to let me know what do you see there.
Let's take a look here.
Let's take a look.
Set up.
While you're doing that, how much money does Macy's make on the Thanksgiving Day parade? They've got to make. That's just a big long commercial, right?
Yeah, I mean, I would hope they're. I mean, they are closing stores, so let's not give them too much credit, right?
It's just a big commercial.
It is a massive commercial. Who watches it though? Yeah, I mean, I'm not. Yeah. Okay. All right. I'll leave it there.
They do. I hate the Macy's Day Parade now. But anyway.
All right. Let's look at Vanna here really quickly on IWM. Ooh. So I mean, this is 240s. Basically, call it the equivalent of 6100 for IWM. So massive wall here. Obviously, major support down here at 228. 227, this 225. So 225 to 230 zone would be an ideal potential entry here on the IWM if we did see a retracement on it. Obviously, if it breaks through 240, it's going to naturally then start chasing 245, and then at some point you get above this 250, you're on your way to 260 then. So you can kind of see the big levers.
Seems like a peak kind of area. Because then that 240 will become negative Vanna. That's kind of like I wouldn't count on anything breaking out of 245, but
I would agree.
I think we're kind of in a fairly, across markets, we're in a fairly toppy area.
Yeah. It's just hard. It's hard this end of this year, unless you have some sort of vision that the market's going to 6,400 or something like that, which I don't. By no means do I do. It is hard trading at these higher levels, right? You have to, your execution has to be a little bit more precise. You have to be patient. Patience. That's all I can recommend. Seek those key levels and wait for them. Hunt them. Pretend like you're a deer hunter. You're out in the middle of the woods since 4 a.m. You're just positioning yourself and you're waiting, right? And it's the same here. You got to wait and snipe until you get to a level, and then you attack it, right?
Yeah.
So,
Yeah.
uh,
And you don't want to try to like top tick either. You don't want to, while I say this is like a topping zone, I mean, there's still quite a bit of momentum up. I mean, you look at the, charts and stuff, you don't want to try to top tick it. And if you are trying to play a bearish play, at least hedge yourself on the way up.
yeah,
It's kind of, and it's hard to do that with ES with your hammer, but with my Swiss Army knife, you could kind of do like little butterflies. Use options to hedge. Don't use it to play if you're not comfortable with options. So and that like little kind of like do a butterfly in the upside or something like that. Center it around 61.25, 61.50. Do 50 wide or something. December OPEX. Hedge that, but protect yourself on the downside too. So
agreed. Are you saying I can't get like Hulk smash gloves? Those hands, like put some dollar signs on them.
You could go long December ES, short change, or March ES. There you go.
That's right. All right. I mean, on the weekly, a little bit of similar view. This 238, obviously an area of interest. Let me just quickly look at the chart here. I think it's trading. It's at 240 in pre-market here, and it seems like, look at extended hours. Yeah, it's just been fluctuating between this kind of 238, 240 zone. So kind of right on par here with what Volland's shown, right? So
Yeah.
I think on the weekly, it's going to be this one. I mean, this is where I'm curious, right? On the weekly, you got this 245 just clearly just, woo, look at me, right? So you see CPI go down. There's a good shot that it is going to spike and hit towards this 245. So
Yeah.
there's my analysis there for you on IWM, especially on this week too. Cool. Yeah. I mean, this is pretty accurate about IWM. I mean, I think in general, like you have to be careful here to what Wiz said earlier, right? One move might look bearish, but another move might look extremely bullish, right? And interest rate cuts, more tax cuts for corporations, like those will naturally help every company in America, right? So you do have a little bit of a bullish push for some of the small caps, besides just Trump coming in and whack-a-moling a lot of tariffs and whatnot. But it's going to be a weird 4 years, guys, and you kind of saw just that paradigm right there play out. Like these are things you just have to juggle going here.
Yeah. Yeah. I think the as far as the Trump trade goes, I think it's beginning to unwind already with financials going down. I mean, I think Trump, he's planning on cutting taxes, but also cutting costs.
Yeah.
Or at least that's what he's saying, overtime taxes and stuff. Labor is going to get very expensive. It's going to get extremely expensive. And I don't see that changing. And also for financials, if you're going to cut taxes and you're going to continue to, pay for whatever you're doing through debt, through treasuries, eventually you're going to drain the liquidity of the banking system. Eventually, eventually there are going to be foreign entities that are not going to buy your bonds anymore. If you're loading it up with supply. So, you kind of have to keep an eye on those bond auctions just to make sure everything is still okay. They have been getting progressively worse. They're not in any danger zone right now, but they have been getting progressively worse. The other thing to keep in mind is for private citizens, credit delinquencies have gone through the roof. The amount of gains on those credit delinquencies these things happen right before major recessions, so just to kind of keep an eye on those things as far as like macroeconomic for me anyway. So we could yeah. So what else do we have?
CPI expectations. So here's a little bit of fun fact. I don't know if you saw the PC report in detail last month, but paper and magazine accounted for the highest increase in the PCE last month, right? And I saw that tidbit and I was like, what where did out of nowhere you're telling me paper and magazines increase? Like first of all, who's got subscriptions to magazines? But I'll digress from that. But paper again, where's the increase in paper? So why I say that is I'd be shocked if we saw something super out of expectation for CPI. I think it comes at target, if not a little bit a hair below. I do think companies are taking the calls of consumers a little bit seriously. Like, hey, the consumer is breaking at this point, right? You know, so that's just my personal opinion. You look at the oil costs over the past month, that's been steadily down as well, right?
Mhm.
So those are my high levels. Not that I know the number, not that I know something, nor do I predicting what it will be. But if I had to give an analysis, I think we go down on CPI. What are your thoughts, Jason?
They've been predicting CPI pretty well over, since that big spike a couple years ago. They've been predicting it pretty well. So I think that usually it comes in within expectations. Um, and a lot of times, like it only takes like a 0.1% deviation from the expectations to cause a move. Um, but overall, oil, has been coming down, and I know, core is what people pay attention to. Um, but overall, like really, the real answer is: are rents going to finally, is shelter going to finally, everybody's expecting shelter to come down, shelter inflation to come down. Will it? I think I don't know if it will necessarily. So it's we've been waiting for that for a long time, and I think that at some point in time, the FOMC is going to realize that there is maybe a danger there. And
Yeah.
I think if it remains elevated, even if it's at expectations, if it remains elevated, the FOMC might, push off cuts another month. So we'll see.
Agreed. Agreed. If
We'll see.
anything, be hedge for the event. Vol
Yeah,
is cheap.
it is right now,
Vix is
especially in the
cheap.
downside. Vol is very cheap.
That's right. So if anything, buy some VIX, right? If you don't want to play that game.
Mhm.
Let's go in a couple more questions here. Are rates the main signal for higher rates, or are rates the main signal for the Trump trade to be considered off the table? I mean, I think you and I talked the tariffs, right? I that's the thing you got to be on the lookout here, right? Like for all the good tax cuts, will bring or deregulation, I should say. Those are all super business, super positive, right? These tariffs, they're dangerous, right? And he even said yesterday, I think he sat down for a special with NBC. I just caught a few clips here and there, but he even said, like, hey, tariffs might increase the cost of your food at home, right? There will be some pain felt for it, but he still feels very strongly about them, right? People need to be paying, or countries need to be paying for their fair share. So I don't know about you, Wiz, like, I think that's the biggest thing I'm looking through at the Trump admin is what hand are they going to show to the tariff game?
Yeah, for me, it's tariffs and honestly, the reduction of labor by deportation. We've been, I'm not saying that, that there's been a lot of people coming in to the country the past couple of years, past 3 years, I guess. And, if you start, these are the people that kind of end up with the lower end labor, and I think one of the big problems, at least on the ground, what I heard in Florida during those two big Hurricane Milton and Hurricane, the other one.
Yeah,
I,
I'm just going to say the other one because I forgot.
I forgot the name of that of the other one, but those two hurricanes obviously they caused a lot of destruction, and Governor DeSantis was, he was pushing all the immigrants out of the state, and a lot of people found that there was no labor to fix their homes. Um, and that became a problem. So if you start doing the same thing for the whole country, you start pushing people out of the country um, at great cost. By the way, I mean that's not a cheap thing. Um,
No.
you know, you're
And a
gonna
lot, I mean, a
labor
lot of
costs
those
will
laborers,
absolutely go up. I think
yeah,
they
well,
will go up.
a lot of those laborers were on farms and things of that nature.
Mhm.
That's how you get your food at a certain cost, right? And
Yeah,
if those laborers are gone, like it's not like we're importing food, right, folks? Like America is still the largest exporter of food in very key areas, and
yeah,
that's not only going to cause it, disruption to the cost at home, but potentially exportation revenues, right? So if the farmer's not making as much money and then paying more for costs but getting less output, it's not a good equation. That's why even
mhm.
Elon, I'm hoping Elon talks him off a ledge with that one, but we'll see.
I don't know. I don't think he will, but um,
That could be the unwinding of the market very quickly then.
yeah. Um, but you won't see it. It won't unwind right away. You'll see it, and then just like it'll catch up to you really fast. But all right, is that all the questions we have, or do we have another?
Well, I think where we at right now, because at some point
I don't
overnight
know.
it teased and broke 400. It hit 402. Uh, you know, hooray! I think right now it's about 396. So I don't know. Like I think this week is going to be a little bit of a weird week. There might be a little bit of a sell, then a push back up, right? I don't think 420 yet, but like more than likely 420 is coming. You hold 375, 350. There's a big zone there of van, if I remember seeing right. Like it's coming. Just be
Yeah, just check.
patient. Buy yourself time.
Change this to Tesla. See what it looks like, and
Yeah.
then we'll go.
Let me bounce over 1 second.
Yeah.
Let's take a look here. Well, I mean, let's first look at just Vanna for a moment. Woo. So there's the 400,
Yeah.
massive strike. Like you need something, a catalyst to get through that level.
You have to get through
That was
400.
yeah. Like
There's
internet.
a we had a discussion actually on the Thursday show, the Traders Workshop show with Tradier that I do in the mornings, and
Mm,
we were talking about there's that ETF. What is it? TSLY, the covered call ETF on Tesla, and it has like it has decent AUM, like millions in AUM, and look at this. This is
yeah.
kind of showing
Yeah.
you what it's almost showing you what that ETF is doing.
Yeah. I mean,
So
pure.
400
Yeah.
seems like a biggie.
400
You
is
can
a
have
big
it.
one.
Yeah.
I mean, if we even look at, I mean, on the weekly here, just really quickly, kind of give you like 370 and 420 here. So, but again, you gotta get through 400, right?
Yeah.
So first break and hold 400. I mean, it could even pop maybe up to 405 and then bring itself back down. So just don't assume immediately that the 400 breaks and you go full port into 420 calls or something like that.
It's actually the
Uh,
opposite looking at that. Because it
that's
looks
what I
like
was
a
just gonna
negative
say.
Hannah, yeah.
This doesn't look so high. This is the weekly here, and then let's look at the just all
Tesla,
expirations.
yeah, Tesla marches to a beat of its own drum though. Like 400, you have to
Yeah,
pass it, but it always kind of marches to a beat of its own drum. You can never count it out, but
no, I mean if you want to look at Delta, same thing. I mean
yeah.
400's the big
Well,
one.
they have their own Delta problems,
Yeah,
but yeah. But
it's a tough
I
pick here.
also I should add to the Delta thesis really only happens because of the cash secured area. Like if these deltas right there at 300 Tesla, even if that's like a synthetic short or whatever, they're just exchanging stock from one hand to the other. And usually, it'd be exchanging stock um, from the put, I guess, from the call seller to the call buyer. And then the call buyer, who is the market makers typically, is already short that many shares. So it just cancels each other out. So really, it only really works out for cash secured or cash settled option classes.
Makes sense.
Mm-hmm. All right.
Got any other questions?
No, I think we're good. And we don't even have that much time, so hopefully we don't have any more questions.
Yeah, holy cow! I just looked up for 5 minutes from the Open. I got to go get ready for the Open.
Yeah.
Well, Wiz, is good speaking with you again, and
Yeah, good
another
seeing
good
you, Jay.
weekly view. Yeah, see you later.
Take it easy.